Hey guys, welcome back to the next one in the series of basically how you learn to be an insurance agent, what you do. Some of the things you're going to find when you go through your training is that the training is not what you think it is. When you go to get the training for your license, they do not explain to you the hows, the whys. They don't explain to you anything when it comes to actually selling insurance. The only thing that they explain to you is basically, hey, you're going to be selling insurance. This is the laws that you have to follow. So what I'm going to explain to you is, I'm going to go through each step as far as life insurance, homeowners insurance, dealing with customers. But this video itself is going to be about car insurance. So car insurance, guys, as everyone knows, you have to have it. You don't have a choice. State says you have to have it to have your license. Now, does everybody have car insurance? No. One of the biggest things that you're going to run into selling car insurance is people that buy insurance from you so they can get an insurance card to have proof of insurance in their car, and then they cancel the policy. It happens all the time. Can you spot them? Yes, you can. If you ask them how long they've been with an insurance company and their previous insurance company, they haven't had insurance for, let's say, 6 months or a year, means that card is probably run out and they're looking for another one. Generally speaking, I try to stay away from people that haven't had insurance for 6 months or longer, just for that fact, and the fact that they do pertain to be a bigger risk. You know, selling insurance, especially car insurance, you run into what's called your loss ratio. And that is how many losses or claims that you have against you versus what the insurance company is actually making off of the people that you have signed up. If you're just signing up junk policies to say, hey, I sold 100 policies this month, or I wrote $30,000 in annual premium, that premium doesn't mean anything if you also wrote $60,000 in claims. So you need to keep that in mind. You know, yeah, it looks nice when that guy reaches out to you that has 13 DUIs and, oh, he's willing to jump on board and pay $1,000 a month for his insurance. And granted, guys, nobody's going to insure him with 13 DUIs. That's just a number I threw out there. But do you want to take that risk? You got to ask yourself that, because, you know, you may not work for the insurance company. You may be an independent agent, but you still represent them. You're still supposed to bring them good business. Good business means someone that's insurable. Do people make mistakes? Yes, good people make mistakes all the time. You're going to run into them that do that. You're going to run into people that had a DUI and they'll never have another one again in their life. You know, that $10,000 fine they might have gotten will do them justice. But you're also going to run into people that have 2 and 3 and 4 and 5. And you need to just question yourself. Do I want to be the guy whose name is on that policy? You know, and you got to look at the risk. If the risk isn't worth it, you know, just think about who you're insuring. You know, there are other companies out there that will insure them. That's all they focus on is high-risk drivers. And sometimes it's better they go to those companies. Let the risk be on them, not on you or who you're representing. Because in the end, if you write enough of those junk policies, eventually they're not going to want to have you on board anymore as an agent. You're more of a liability to them than you are of getting good business for them. So remember that. Take that into heart. The other thing with selling car insurance is most car insurance policies are written for 6 months. Car insurance policies can be sold for a year. There are companies that will do it, but most of them are written for 6 months. And they do that for a reason, because every 6 months they'll go through the person's driving record. They'll update what their credit score might be. They'll update their insurability score. You know, there is an insurance score that follows people. They'll update that. And a lot of companies now are using these devices like, you know, State Farm has Drive Safe and Save. Progressive has their Snapshot program. All of them have different types of programs. What those programs do is they do track how the person drives more than anything. They track A lot of times, the biggest contributing factor is how many miles they actually drive. Car insurance is based off of how many miles you propose that you actually drive in a year. Someone that's retired that drives less than 5,000 miles a year, of course their rate's going to be cheaper. Those are the rates you hear about on TV all the time, $35 for full coverage insurance. Yeah, they're probably 80 years old. They're retired. They drive less than 4,000 or 5,000 miles a year. Their vehicle's probably an older vehicle, probably paid off. They probably haven't had a ticket in over 30 years. And they've had continuous insurance coverage and probably perfect credit. That's usually the way it works. That's not saying that someone that's younger can't have a low rating as far as for their insurance cost, because it does happen. But generally speaking, it's not so. So you got to keep that in mind. There's a reason why someone on the phone with you, you might run their credit. They'll say, I've never had an accident. I don't understand this. I've never had an accident. I always do everything I'm supposed to do. I don't get this. In the background, they may not be paying their bills. Their credit score does have a lot to do with it too, because they look at risk. Who is going to be the most risk? Who's got the biggest risk? Same way you hear insurance companies ask, well, what do you do for a living? There's a reason for that. Someone that's a professional driver, someone that works in law enforcement, they might be a first responder. They look at them as being less of a risk than someone, let's per se, is self-employed or works construction. Why? The guy that works construction might be taking his pickup truck to a construction site every day. He might actually be using it for work, not just for his personal and pleasure usage. The guy that owns his own business, he may own several businesses and just report one. That guy could be a drag racer on the side and then, just run a different business. That's not saying that someone that's not a doctor or a dentist can't do the same, but that's generally how they look at it. Everything is based off of risk. And you are going to run into the customers that say, I don't want to give you that information. Well, I hate to say this, we don't have that choice. That's not our choice to make. The insurance companies set the information they need, the information they can legally ask for, the information they want. It's not a right for a person to have insurance. It's a responsibility that they have it, but it's not a right that a company has to write it for them. This isn't health insurance. This is car insurance. Now, can they be racist or sexist or against a religion? No. And you'll never hear those questions asked. Never. Not once when I sell an insurance policy do I ask what race, religion someone is. Not needed. It's not based on any kind of risk factor. It's not based on it. Now, will they ask for what race someone is for health insurance? Yes, they will. Because there are certain diseases like sickle cell. You're not going to find that in certain races. It follows genetics, and they will ask that. But it has nothing to do with the color of your skin or the religion that you are. So you're gonna, like I said, you're gonna run into people that are very difficult to deal with, and you just have to explain to them the fact that you don't make the rules, you don't make any kind of rules or any kind of regulations. You simply follow the rules that were set and were given to you. Now, that being said, with car insurance, and this doesn't matter if you're selling it in Tennessee, if you're selling it in Washington State, where you're selling it at. You're going to hear people throw around the term full coverage. Let me explain full coverage to you people, because full coverage does not mean full coverage. Not what you would think it would mean. So to give you an idea, full coverage insurance consists of three parts. You have liability, you have comprehensive, and you have collision. Liability, that first one, covers everything that you don't own. Now, when I say that, I mean that includes a stop sign that they might hit or a guardrail. That includes the other person's vehicle, a house, anything they do not physically own that is damaged in an accident is liability. You're always going to have three numbers. Your first number is going to be what they'll cover for the injuries of one person in the other vehicle. The second one's going to be what they'll cover for the total injuries in the other vehicle, regardless of how many people are in the other vehicle. The third number, and this is the one that's going to get most of your clients, that's what they're going to cover for personal property. Personal property is everything your client does not own. To give you an idea, in Minnesota, the rules are 30, 60, 10. That's $30,000, $60,000, $10,000. Now, there's not many vehicles out there for less than $10,000. So if your client runs into that brand new Mercedes and they've got minimal coverage on their full coverage insurance, they're not fully covered. No. Your client's car will be covered, but the other party's vehicle will not. They won't have enough coverage for it if it's more than $10,000. Will the other insurance company sue them? They can. Will they? That's up to the insurance company, but they can. Generally speaking, and this is in Minnesota, I always try to get people to go with a $100,000, $300,000, $100,000 policy. Now, in other states, there's other options that are offered. But you always want to go with an option that's going to fall in the middle of the line at least and give them the most chance of being covered. Now, $100,000 coverage, are there $100,000 vehicles out there? Yes, there are. But generally speaking, $100,000 is going to cover the average vehicle, and it's going to cover any other damages to personal property. Now, that's not to say that your client's not going to run into a school bus, and the school bus costs $100,000. It's not to say it's not going to happen, but it gives them a better chance of coming out of it on the legal side and being covered. And the difference in coverage between minimal coverage, guys, and what I just quoted you for the middle of the line coverage, you're talking $10, sometimes $20 a month. Is that a lot of money? Can they make up the difference between $10,000 and $100,000? That's a $90,000 difference. Can they make that up? If you figure out how many years it would take them to make that up at $20 a month, by the time they stop driving and their kids stop driving, and probably their grandkids stop driving, they still wouldn't cover the $90,000 difference. And that's what you have to look at is, insurance as a whole is always going to be not only what they can afford and what they need, but does it make sense monetarily wise? So to give you an idea, you're going to also deal with deductibles when you get to comprehensive and collision, which I skip around a lot. Let me get to comprehensive and explain that. So think of comprehensive as everything that your client can't control. Hail, fire, wind, flood, a branch falling on their vehicle. It's everything they can't control. A deer. That's what comprehensive is. Collision is everything they can control. So collision would be running into that stop sign, running into that pole, running into that other vehicle. So can they buy just comp-only coverage? Yes, they can. Generally speaking, most companies will allow you just to buy comprehensive only, but they also will only allow you to put it on there. Usually, they will only allow you to put it on there if the vehicle is parked. That means parked not in a public parking lot, but parked in a garage, somewhere secure. Sometimes they'll allow you to do it in your backyard as long as it is covered, like under a carport, something like that, mainly because of hail, especially if you're in areas where they have hail. But generally speaking, they will allow you to do that. Now, as far as your deductibles go, can you have two different deductibles? Most states allow that. Most states will allow you to have one deductible for comprehensive, one for collision. Now, why would you have two deductibles? So let's say I live in the middle of nowhere and there's a lot of deer around me. I'm going to want to have a lower deductible because I have a more probability of hitting a deer. And it's going to give me the best coverage. I'm not going to have it come out of pocket for most of the cost to fix it if I have to fix it. Versus if I live in an area like the city where they don't have, if I live in New York City, they don't have hail out there usually. Don't usually have to worry about just a random fire hitting my vehicle. Do you have to worry about flood? Depends on where you live at. I would have a higher comp deductible living in the city. I would have a lower deductible for collision because I'm in more chance of getting in an accident, but not for comp. For collision, I would be. So you kind of judge the factor, look where you're at, look where you're selling. Most people will go with the same deductible for both, but you do have an option there where you can try to save your customers some money by changing those deductibles to fit their budget. And when it comes to deductibles, they also got to make sense. I mean, telling someone, hey, I can move you to $1,000 deductible, it's going to save you $10 a month. Okay, so if they get in an accident, they're going to pay $10 less a month to have to come out of pocket $500 more. That doesn't make sense. Now, if it saved them $50 a month, then yeah, it would make sense. Over a year's time, they're going to make that up. If they have a claim and they pay the extra $500, it's the same as them saving the $50 a month. So you got to look at what makes sense also for the customer. You really do, because you want the dollars to make sense. And that's for homeowners. That's for any insurance that has the deductible, not medical insurance, but for any of your home insurances, stuff like that, property type insurances. Now, when it comes to auto insurance, you also got to look at what they call uninsured and underinsured motorist coverage. That's very important. So to give you an idea, in Florida, you can get insurance for $13 a month, liability only. Is it going to cover anything? Probably not. If somebody hits your vehicle and they've got that type of insurance, the most they're going to cover nowadays is probably a door handle. Really. So, you want to look at what they, and all liability insurance covers are all uninsured and underinsured motorist covers is basically bodily injury only. It's not even going to cover your damage for your vehicle. So that's why you kind of want to make sure that your bodily injury coverage matches. If I sell a policy, I try to always make sure that my uninsured motorist and underinsured motorist coverage matches what their regular liability coverage is. Cost is not that much, and it's worth it. That way they know if they get hit by someone, their injuries are going to get covered. Your own are going to get covered. And then when it comes to adding on some of these other things that insurers like to add on, like roadside assistance. Generally speaking, roadside assistance, when you buy it with car insurance, is cheaper than you can ever buy it for outside of car insurance. It really is. I mean, in some cases, one of the insurers that I deal with, you can get roadside assistance that covers coming out and jump starting your battery, bringing you gas, putting a spare tire on your vehicle, towing you 50 feet in the snow or the mud, towing you up to 15 miles if you break down. Less than $1 a month. They'll never be able to buy that anywhere else. I don't even think AAA is that cheap anymore. I could be mistaken, but I don't think it is. But you can add that as part of your insurance coverage. When it comes to selling car insurance, there are some rules that you need to remember. Number one, anyone living in that house where that vehicle resides needs to be listed on the policy. They need to be listed on that policy. Even if they have their own insurance, they don't drive. If they're of driving age, they should be listed on that policy, and you just notate it. Such and such lives in the house. It's their brother. They have their license, but they have their own insurance. They never drive the vehicle. And you need to make sure that they never drive the vehicle, because if they drive that vehicle and this person's just lying to you because brother's got 3 DUIs, they don't want their insurance rate to go up. Their car gets in an accident and brother's driving it, he's not covered. Neither are they. You need to make that very clear to your customer. Very, very clear. And you might even make notes in the system. Generally speaking, I will send an email out to my customers like that to confirm it and get them to reply back. And I'll keep that email on file. Why? It protects me and it protects my customer. Quite honestly, it protects my client too, as far as, my client being the insurance company. It protects them as well, because, technology is so great nowadays. I can't tell you how many customers I've sold policies to. They confirm they're the only person in the house. Insurance company reaches out to me 5 days later. Mr. Johnson, can you check with this client? It shows that they have these 3 people living in the house with them. Who are they? Then you have to find out who they are, get them to confirm who they are, let the insurance company know. And 9 times out of 10, oh, I forgot about them. Yeah, they drive too. People, get that straight, because if you don't, I can guarantee you when they get in an accident, they're going to come back and say, well, I told you about him. Got to always cover your butt as an agent. They will go after you. There's people that make it that's their job, is to go after you. They know you have errors and omissions insurance. They will go after you for it. So make sure that you have everything covered. Get your ducks in a row. Another thing is when it comes to people where they actually live at, make sure they actually live there. Ask them, is it an apartment? Is it a house? Where do you park at? I can't tell you how many people I've had give me an address that they tell me it's a house. I Google the addresses. I pull it up and say, hey, the only thing within distance of that address is an apartment building. Sometimes they won't tell you that, because the fact that they know if they park in an apartment building, they're parking in a public parking lot, their insurance rate's going to be possibly a little higher because they're parking in a public parking lot. And they know that. And any way they can save $1, they're going to. So you need to keep that in mind too when you do this. The other thing is you want everything to be correct. Insurance is very important. Everything is correct. All information is correct. Will there be times that your customer will tell you about an accident and that accident's not going to show up when you run their driving record, their MVR? Yes. Should you list that accident? You should contact your insurance carrier and ask them. And I say that for a reason. Some carriers will only look at accidents that have happened within the last 3 years. Some look at 5. So you need to make sure that if they tell you they've been in one, write it down. Just tell your customer, hey, let me do something here real fast. Something came up. I will call you right back. Give me about 5 minutes. Call the carrier and find out if they want you to list it. Do it before versus after. You do it before. Then if they tell you it has to be listed, you list it. The price is too high. The customer goes down the road. You do it after. Now you've collected their payment. You've given them all the paperwork. You've spent the time to get them sold on the policy. Now they come back and they re-rate the policy. Now the rate's gone up. Now you got to play catch up and explain why the rate went up. And they're not going to care the fact that you didn't find out what happened. They're not going to care about that. They're going to say, well, why didn't you tell me that from the start? I told you I had that accident. They don't know that you didn't list it. That's up to you. Remember though, guys, when you're selling car insurance, don't worry about the rate. Don't look at what you're going to make off of it. Selling insurance by looking at what you're going to make off of it is the worst thing you can possibly do. Are there agents that do that? Yes, there are. There are agents that strive that they're not going to go below a certain dollar amount. And they push their customers into buying insurance coverage that, quite honestly, they probably don't need. A retiree that's sitting at home that never drives anywhere, do they need $250,000, $500,000, $250,000 coverage? Probably not. Probably not. Especially if they're living on an island or living, in a rural area around nothing. The chances of them having a catastrophic accident where they need that type of coverage are very slim. Should you provide it to them? Yes, provide them the option. Write them the quote for it. Explain to them what it does. Let them make the decision on it. But you also don't want to sell them the bare minimal coverage, because if they do have an accident, you want to make sure they're covered. And you want to make sure that they have the coverage they need. So they come back after the fact and go, hey, thank you for looking out for me, man. Everything went smoothly. Everything was covered. Claims process was great. Make sure of that. Make sure of that. If they have customizations on their vehicles, make sure you're listing that. If they have a vehicle and they call you on the phone, and I run into this more than anything. Yeah, I've got my pickup truck. It's 30 years old. I don't really drive it except on weekends. And then I've got my 2 other cars. Question them about that pickup. Hey, is that pickup a classic? It said it's 30 years old. What kind of truck is it? Do you take it to car shows? Well, yeah, I do take it to car shows. Well, if they're taking them to car shows, you don't want to put regular car insurance on it. If I take a 30-year pickup truck, beautiful, looks like it just came out of the showroom, To a regular insurance company, it's still a 30-year pickup truck. It's still a 30-year-old pickup truck. So what are they going to do with that? They're going to rate it like a 30-year-old pickup truck. So they're going to say, we looked up all the other 30-year-old pickup trucks and it's worth $5,000. When in reality, that truck might be worth $30,000. Might be a collector at this point. And, you know, if you just put regular insurance on it, they're going to rate it off of every other 30-year-old pickup truck that's just like it. Same make, same model. They try to get close to the mileage. If that guy's telling you that he uses that thing to go to car shows, now you need to go with an agreed upon value insurance policy, something like Hagerty would offer. And we'll get into Hagerty. I'm going to cover Hagerty in a different video because I actually sell Hagerty and I can speak on the back of it. And it's a perfect policy to offer your clients when they have, you know, older vehicles that they tell you that they're used for collector vehicles, or it was grandma's car, so I don't ever really drive it. Okay, cool. That's a perfect car to put on collector car insurance because of the fact of it. It means something to them. It's not their daily driver. It's not the car they get in to go to Walmart. So that's how you have to look at that. I hope this video today has been very informative to you guys. Just trying to get you guys taught in the stuff that no one taught me, that I had to learn from just doing work in the business here so far. And give me a thumbs up. It really matters. Give me some comments. Did I leave anything out? Quite possibly did, but I tried to cover what I could. Have any questions, send them in there. My email address is always in the description at the bottom. Send me an email. Reach out to me. It's rtrepairs@outlook.com. Just send it to me, and I will be glad to help you. That is my other YouTube channel also. It's RT Repairs. Please go on there and look at the videos on that. Some of them are funny. You know, I work on cars on the side, and I run that business. Check it out. You know, RT Repairs. It's a funny channel in a lot of ways. You can also send me an email at robert@robertjohnsoninsurance.com. Easy one to remember. But I'm glad I can make this video for you guys today. Like I said, please like, please subscribe, please give me that thumbs up, ring the bell. Let me know what you think, and we will catch you on the next video. Thank you.